So what a weekend it has been of drama on the YouTube stock finance space. There's been so much. There's been points on Saturday and Sunday where I thought, you know what, I'm going to have to make a video about this, but I thought, you know what, let's save it for Monday. And in fact, there might be a few videos about what's gone on across the weekend. It's been yet a massive drama seen on the YouTube and stock finance space. More drama than an episode of Coronation Street.
Giving away free champagne.
Hey, she's just pulled half my hair out.
I know, we saw it through the window.
Well, you need to do something.
Like what?
Break the door down, I don't know.
And for the US viewers, for you guys that don't know what that is, basically it's a TV show in the UK that there's always a bit of drama going on. But yeah, there's a lot going on here. So the first little thing here is that I'm going to just publicly make a video stating that I have challenged Financial Education to, or accepted his challenge that he put out on YouTube a few days ago.
I've had a couple of people reach out to me. They want part of the YouTuber, let's call it finance challenge, stock challenge, okay? So here's the deal, all right? I need everybody that actually wants in this. I need you to reach out over the next, let's call it a week or two. I need your 10 stocks. You can pick 10 stocks. You can pick ETFs. You can pick index funds. You can do a combo of whatever.
If you don't know, he basically, and I think this is a great idea, whether you love financial education, whether you hate financial education, I really like this idea that it's put out, which is to challenge the finance stock YouTubers to a stock pickers battle. And over the next 1 year, which I do think is a bit short term, but 3-5, which is particularly where I would say my stronghold will be, and 10 years to see who are the best performing stock pickers in that time frame, and to pick 10 stocks and to see how they perform in that time frame. And I think that's absolutely fantastic. I think it's a great idea to kind of, for you guys, the viewers, to actually, you can't hide anywhere. These are your picks. You actually get to see, for you guys, the viewers, you actually get to see which of these YouTube channels, which I think there's a lot of hypers in here now, a few people that don't really know what they're on about, for you guys to actually see performance. Okay, no hiding. This is performance. This is the table. It'd be interesting for you guys, viewers, then to go, actually, these are the channels that I should be listening to. So I think for you guys, the viewers, this is an absolutely brilliant idea, whether you're not, you love financial education, whether you hate financial education. And for us, the finance YouTubers, those that actually want to kind of go, you know what, I actually have confidence that I'm going to pick really good stocks in the next few years and show off a performance and get that little bit more respect and kind of break that kind of control over the big YouTubers that can basically put out a lot of rubbish, a lot of picks out here that are just absolutely awful, for generating views. You guys, the viewers, can actually get who are the decent YouTubers now, and also for us, the YouTubers that are outside of that top 5, I would say, you get to kind of get a bit more exposure to the ones that you should be listening to. And I particularly would back myself to do quite well in this competition. Not saying I'll do the best, but I would back myself to do quite well in this competition. So yeah, that's what I'm going to say on that. And I've got to say, in my opinion, this should be open to everyone. Like, I know that financial education limited it to a few YouTubers on that video, but in my opinion, he's got the manpower and exposure to kind of open this up to the whole YouTube space, and we get to actually see which, on the whole YouTube finance space, which are the best stock market finance YouTubers. And I think it should be something that everyone wants to be into. I think that if you want to get respect, it doesn't matter on the conditions of what the competition is, as long as it's very simple format, 10 stocks, pick them, let's see the returns, open to everyone, an easy document where you can easily find out yourself who is performing in that time frame, who's performing right now. That's all we need to do. And I think that every financial YouTuber should want to be in this competition. It's a chance to show off if you actually have good finance or stock picking performance. So I've got to say that as well. I think that it should be open to everyone. That's my only concern, or my only thing that I don't like about it. I want it to be a complete competition for the whole finance YouTube scene. And it shouldn't just be limited to a certain amount of YouTubers. My next point is that it does not need to be about money. One thing, the way they started off was it was between everything money and financial education, and it was supposed to be a competition, a stock picker competition, and there was money on the line, and if they lose, this much goes to charity, which is fine. If you want to go down that street, you can do that. If you want to have a personal battle with someone else and you want to put money on it, that's absolutely fine. You can go down there. But in my opinion, this doesn't need to be about money. All you need to is actually have the reference points of who's actually performing, because that performance, that stock performance, the stock picking performance, will be a bigger reflection than what the money will be, because the performance will reflect to the audience, because you naturally, hopefully, I mean, I don't know, there will still be some people that would go watch, people that are just promoting pump and dump stocks anyway, and still continue to watch them, which is absolutely stupid, and the YouTube algorithm would still maybe push them in that direction, but that's another story for another day. But you'd think that, okay, if every kind of stock finance YouTube channel is taking part in this competition, then the viewers, the audience, and the YouTube channels would then get the exposure for the ones that perform in the best picks, and that would be a reward in itself. And the ones that are, aren't doing all the talk about this stock will do well and their performance is absolutely terrible, then they should not get the exposure, and that will be a bigger reward, I think, than whatever you can do these individual battles of this money will go to charity if I win, or who performance is better. I mean, you can do that if you want, but I think the performance would be enough. I think that'd be a bigger reward or punishment for not performing in this time. So yeah, I think that is obviously one thing that I'm going to add here. And also one little thing that I'm going to say that I didn't like, but I understand the reason why, and I'm probably actually a fan of it saying that, is that one of the biggest advantages as a long-term investor is you dollar cost averaging into positions. As a long-term investor, you're obviously going to dollar cost into positions, which you can't do in this, because you're going to pick your stocks and it's whatever it is from that day, which obviously takes one of the biggest advantages as a stock picker out of your hands, I guess, really. But one thing I'm going to say is that this also has its benefits to the smaller channels, because the smaller channels, obviously, a lot of the smaller channels don't rely on, like course income or YouTube income, and have a lot of disposable income where they can dollar cost average on any stock they want to. Someone like, say myself, I still work full time, so for me to dollar cost average on a position is extremely hard. Whereas a lot of YouTube channels, for example, can be taking, partnerships or brand deals with companies and earn multi six figures. FTX, we're going to talk about that maybe in a little bit, and obviously that can give a massive cash injection to get a lot better averages into positions. So that obviously takes one of your biggest advantage where as a long-term investor, but I understand it, and in fact, if anything, it gives a channel like myself a little bit of an advantage. And so I have sent my 10 picks into financial education on Instagram, so the ball is in his court now. And what I'll also do right now is I'll actually go through my 10 picks for like a minute or two and explain why I picked them. Obviously, they're going to be 10 stocks I already currently own, and obviously the stocks that I think will perform probably the best. So we'll spend a minute or two on them. So I tried to split up my picks into thirds. So one third was growth, which obviously I'm a bit of a growth investor. The other third was my kind of big tech companies, my kind of big market caps, my safe companies, a lot more value based, but also have a bit of growth. And then my last third was a bit more of UK based stocks, and hopefully use that UK edge to my advantage a little bit. There's a bit of a mixture, like I said. I would say half of them are growth, I would say half of them are more value play. So yeah, I've tried to give myself a bit of a mixed bag here, and a few little dividend stocks as well in here, or stocks that do pay dividends. So yeah, we'll take a look. Obviously, number one was DraftKings. I had to put DraftKings in here, as you guys probably know. It's my largest position, so I had to put it in. I think in the next 1 year, 3 year, 5 year, 10 year, this will be probably the best performer that I pick. Sports betting is going to be massive in the next 10 years in the US, and if they actually expand worldwide by that point. So yeah, I think they'll be driving in the future good amounts of profit. They'll still have good revenue growth. I think sports betting will be taking over most of the population in the US by then. And yeah, I think DraftKings in that time frame will be pushing somewhere between a 50 billion to 100 billion market cap. So yeah, this is a easy pick for me. Next growth stock I picked was Hims & Hers. Telehealth I think will be a massive play in the next few years. I think Hims & Hers will do very well. And at a 1.1 billion valuation, with the growth it has, the gross margins, the profit growth it will probably drive in the next few years, I think this will be a growth stock that potentially could 5x to 10x as well. The next one was Celsius. Now this one I was 50-50 on putting on this list. This was one that I was actually a little bit unsure on. The reason why I was a bit unsure on Celsius is that I think the company will perform absolutely amazing, and I think it will be up in the next few years. I just don't know how much it'll be up, because I am buying this at a 5.9 billion market cap. And to be honest with you, for me to put this on this list, I would have ideally wanted it to kind of be at $41, and that would obviously put it around about a 2.5 billion market cap, which I think is a lot better valuation. So this was a bit of a one that I was a bit unsure on, because I thought, you know what, in the next few years, the drinks part of this business is going to be massive. The only little problem I had with is the valuation. I would love to have put this on at $40 rather than $78 because of this run up that it's been on recently. But hey, you notice something a trend here with these stocks that I picked. They're all stocks that are performing financially absolutely amazing. Like the stocks that I own that are having financial problems, which I think will still be okay, none of them made the list. I went for stocks that are all financially performing here. Google, I think Google's a very safe bet. I think in the next 5 years this will double up. 21 times earnings, good valuation, still, will drive the growth forward with YouTube, the search part of it. That'll drive profit and revenue. That will also generate good amounts of profit, amazing balance sheet, buy back shares. Very easy value growth, big market cap stock to add in there. InMode, bit more of a growth play, but same again, it's got a good valuation, 12 times earnings, has good profit, revenue growth, a lot of profit there, a lot of cash sitting on the balance sheet, will buy back companies, potentially acquire a few companies. Only stock that I'm a bit unsure on the longer term time frame. I think in the next 1, 2, 3 years, it'll probably give me a good 5x return from here. My only little concern that I have is where it's at in the longer term, that 5 to 10 year mark. I don't know how they'll handle competition, if they carry on reinvent themselves with new machines. This is the only one that I'm a little bit unsure on in the longer term time frame. But the moment of the valuation and the growth, I can easily justify putting it in. PayPal, same again, a bit of a value growth play, 24 times earnings, will grow at 10+% revenue growth going forward. That'll lead to good amounts of profit growth, and also obviously more cash on the balance sheet. And I think PayPal is a good valuation down at $73. Same again, I think that this will bring in a 100 to 200% return in the next 5 years. Meta is one that I'm a bit unsure on in that 5 to 10 year time frame, because they need obviously the metaverse to really kick on for them. But in the next 1 to 5 years, I'm sure that Facebook, WhatsApp, Messenger, Instagram will carry on the platform forward still, even at 12 times earnings. This company, even if it grows at 10% revenue growth, and let's say 5-6% goes to the profit, at 12 times earnings, it is an incredible valuation. So yeah, this one's a bit, I think it will do well. It's just a bit unsure on the 5-10 year side of it, because it needs Meta to kind of kick it on from there. And also the only little thing that I'm unsure on is the return side of it, because the metaverse can basically, what will affect the return of this. I think that though it's easy to say that I'll probably double up my return from this, but if metaverse does really kick on, I think it'll be more than this. Going on to some of the UK stocks here. So these are the 3 UK stocks I picked. S4 Capital, absolutely fantastic growth stock. Was 50-50 about putting this in the list, because I obviously have Google, which obviously relies on advertisement, and Meta, which relies on advertisement. So it's a bit risky to add another one in, which was S4 Capital. However, I just couldn't resist it at these sort of valuations and the growth that it's putting in. So I did have to put S4 Capital in here. Hollywood Bowl, I'm sure you guys would have known this one was going to make the list. 8 times earnings, which is a joke. I think this should be trading up at a 16 times earnings at least. And then you factor in the growth, especially with the new centres and the Canadian expansion as well. Also pick up a 1.5% dividend yield, so that was a given. Airtel Africa, another UK stock, gives me some exposure into Africa, whether it will be through the internet expansion or the money side of it, and the kind of PayPal service to have going on. That should drive profit and revenue forward. 10 times earnings, which I think should be higher. I think it should be trading at a multiple probably of 20-ish. Also, when you factor in the growth, also picking up a 2.7% dividend yield as well. So this will add in a bit of a dividend stock once again as well. Definitely had to add this one in. And those were the 10 stocks that I picked. 3 stocks I'm going to mention, because I think a few guys will go, well, why didn't you add that stock in? Wouldn't have been Gang. Why didn't I add Gang in? Well, I was very close to adding Gang in. The only reason why I didn't add it in is because I've got DraftKings in here. Didn't want to put 2 stocks in the same industry in here. And also I've got the market leader. I think DraftKings will perform better than Gang over the longer term. However, I still think they're both fantastic companies, but I just had to go for a little bit of diversification with already risking kind of S4 on the advertising side of it with Meta and Google in there. I think I'll get away with them ones just because they're slightly different. The next one was Boohoo. Boohoo. Why did I not put Boohoo in here? I did really think about it. I was so close to putting it in. My only problem is that, like I said earlier, I had to go with companies that are all financially performing right now. Unfortunately, Boohoo isn't. You know, it's been affected by the logistic issues, and don't get me wrong, I think they'll sort it, and that will drive the share price up and the revenue back and the profit back. I think that'll be okay. I just couldn't put it in at the moment though, because I didn't want to take that risk that it's not financially performing right now. So yeah, that's the only reason, but I did really consider it. And then other one probably is Huya. Why didn't I put Huya in? Same again, I did really consider it. The only problem is I don't know where the Chinese are with the regulations on the gaming space right now. We've seen how much that's affected Chinese stocks and Huya in the last few months, and with a pressure that's out of my control on this stock, same again, that's why I didn't want to put it on this risk, because I don't know where the Chinese regulation will be, and that I can't control that regulation in that time frame as soon as I picked it. So that's why I didn't put it on the list. So those are the 10 stocks I picked. So there you go. The ball is in Financial Education's court right now. He's got my 10 picks of stocks that I sent across to him on Instagram, and yeah, I'm looking forward to the challenge, and I'm sure we're going to probably get a Champions League place. That means the top 4 in this YouTuber challenge. So we're looking forward to it. You guys in the comment section, let me know what you think of my picks. You know, if there's any stocks that I should change in there, or any stocks that you don't particularly like. I'm always up for hearing you guys' opinions in the comment section. But yeah, hope you enjoyed it, and I'll see you in a bit.